Let's talk about time, because when it comes to investing, your time frame really shapes the way you should think about your money. And to make it a little bit more fun, we've got this little map to guide us along the way. Think of this as your money's journey, from a short little trip to a long, epic adventure. And just like any trip, the way you travel changes depending on how far you're going. We'll start with short-term goals, like a new car or a holiday. When you need your money in just a couple of years, safety is the priority. That's why high-interest savings accounts or cash ISAs are usually your best bet. You can prioritize your certainty over the potential of higher returns. Next stop, medium-term goals, like a wedding or a house deposit. And that's this little house here. Here it gets a little trickier. You want growth, but not too much risk, because if markets dip, you might not have the time to recover before you need that money. You could look at investment funds with a lower proportion of higher risk investments like shares and a greater proportion of lower risk ones like bonds. These are often called low equity funds. And finally, long-term investing. That's this little deck chair here. This represents retirement. Markets will have ups and downs along the way, but time is on your side. Over decades, you can afford to take more risk for potentially higher returns. That's why investing for retirement or long-term goals is usually where the magic of compound interest really shines.